And this is not a once in a 50-year currency reset. This is like a 1 in 400-year currency crisis that's so well known that it'll be generations before it's forgotten. The demand for industrial silver, the 1,000-ounce bars, is at a level that I have never seen before. And it's causing, in my view, or one of the main causes, to see a significant rise in the silver price.
Silver is on a historic breakout, a boom that we have not seen in over 40 years. Silver has risen above 100% this year so far, and this is its best showing in a year since 1979. The metal is now trading to new all-time highs that are above $59 an ounce. What is even more remarkable is that silver is not the only one at this moment. Gold and copper have also made record in the same year, something that we have not observed in the past 40 years. The last time these three metals united like this level of power was in the early 1980s, when the world geopolitical atmosphere was tense and the US dollar was weakened by escalating inflation. The old motives are in place though: the inflation concerns, the international insecurity, the currency strain, and some new dynamics are influencing this rally. We have David Morgan with us, one of the most well-known voices in the precious metals world. He is the creator of the Morgan Report and the writer of the Silver Manifesto. David has long foretold that the global monetary system was entering the phase of accelerating instability, the fiat currency is in the process of a long-term debasement, and that precious metals will be the key to whatever financial system is created next. Let's dive into today's video to uncover some valuable insights. Don't forget to subscribe and hit the notification bell so you never miss an update.
Well, we have been in a secular market since basically the year 2000 for gold and 2003 for silver. And we've gone from 252 gold to 4,400. It's backed off somewhat. But all markets move basically in three phases up, or five overall legs. There's an up phase, a down leg, an up phase, a down leg, and a final up leg. We're in the final up leg. I just had one of my clients ask me this very question, and I explained to him that in the acceleration phase, you will see, as the name implies, larger movements rapidly. And obviously the market's going up, doubling in a year is something you haven't seen in silver until the final phase of the earlier bull market that went from basically 1970 to 1980 in gold. And I would argue from 1966 or 65 to 1980 in silver, because silver was basically demonetized, out of circulation in 1965. So the final phase is when you get the panic manic phase at the very top. We're not there yet. We need to see the public come back into this market. But when they do, it'll be, unfortunately, from history, it'll be more on fear than greed. It'll be fear that the dollar's losing value, fear that I don't have enough for retirement, fear that my pension plan won't be there, fear that my IRA is going to be taxed beyond what they originally said. I mean, there's all kinds of things I can make up. Some of them legitimate, some may be out in the weeds. Nonetheless, the point being that fear drives a market harder than any other emotion. And I don't like to see it, but I do know the markets. And I do believe that's what we're going to see within the next couple of years. And many people say, well, the silver deficit that we've talked about will guarantee, well, they haven't used the word guarantee, suggests strongly we have a 10-year bull market. On fundamentals, I agree with them totally. But being a student of the markets since I was a 16-year-old kid, I'm well past that now, we're in the acceleration phase, and it doesn't last long. We get a big movement in a short amount of time. And this is what we've already entered.
Stock prices are on edge, bond and real estate prices are in a downward trend, and global debt is at an all-time high. The reason why these coinciding and alarming trends are occurring is that a great part of the world is existing on credit overkill. Payment is now due. The other one is the way the markets have swollen with the failure of the financial systems to adequately invest savings into good investments. All this is an indication that the correction that will come to financial markets will be more shocking, in every sense of this word, than in previous instances. It will probably lead to a radical reset of financial regulation structure. History is pretty clear on one thing according to David Morgan: all currencies that are not supported by something tangible end up failing. It does not necessarily fall into complete zero, but it is always replaced, either by reintroducing a gold or bimetallic standard, or by issuing a new currency in which the old notes are exchanged with new ones at an exaggerated rate. Now let's redirect our attention to the video again.
So all recorded history has substantiated the fact that any currency that's unbacked fails at some point. It doesn't mean necessarily it goes to absolute zero, but it does mean it's replaced, either with coming back to a gold standard, or coming back to a bimetallic standard, or reissuing a currency, turning in 10 old notes for one new one, or that type of thing. We've never seen it in an advanced economy like we have in the United States, where basically our debt market is considered to be the sacred situation for all monetary aspects. In other words, the T-bill, T-bond, T-note market is so important and so well trusted that the whole system relies upon it. And yet that's starting to fail now. So the bankers know, anyone that studies, what you and I talk about understands that we're at a mathematical impossibility to be able to pay off the debt. And we're getting to a point where it's going to be more and more difficult to just pay the interest on the debt. And what that requires, it's what it's always required. That means a new system, which means, are we going to move to a CBDC or something similar? And the answer is most likely yes. And the time is short because we are in a situation where the Fed, as I wrote in the last editorial, cannot do anything correct at this point. If they try and lower interest rates and weaken the dollar, which is their motive, it may not work because the market itself will take precedence and say, I don't trust your T-bill or T-bond like I used to. In order for me to be the sucker to hold on to it much longer, you have got to pay me more in interest because I think the debasement of the currency is built into the cake and I need to be compensated. So they could be in a situation where it's already manifest, where they lower interest rates, but the 10-year note doesn't budge. And that's the problem they face. So no matter what they do, they're basically out of control from what they have had in the past. And once that takes place and the market starts to take control, which it has and will continue in my view, then you will see a bigger motivation than ever to reset the system in one way or another.
How do they reset the system?
Well, that's the debate, isn't it? I mean, is it call in a currency and issue a new one? I doubt it. It will be a move to a digital currency, probably with a lot of political rhetoric, a lot of financial stalwarts coming to, let's say, the propaganda press and letting us know that we need a new system and here's what we're going to do about it. We're going to wipe out the national debt with Bitcoin. It goes away. We're going to restart. Everybody's going to have the ability to transact with their, local token exchange. And all you have to do is get registered at your local post office and away we go. I mean, that's not totally imaginary. I don't know if it'll go exactly like that, Michelle, but it'll be something along those lines. The system really is a digital system right now. Yeah. The only thing that's preventing it to go in full force is to dwell into people's consciousness, the cognitive map, the way they think about money, that the new system is really better. It's better for these reasons. You really want it, and to basically install it. And again, it wouldn't be a really big change as far as the computers running the system. It would be a psychological change. That, oh my goodness, we're done with that debt. We are on a new track. We've got a better system, a more convenient system, and away we go.
We're witnessing a rare moment in financial history as precious metals surge together, debt burdens grow, and traditional markets show clear signs of strain. These shifts suggest that the current monetary system is under pressure and that a major transition may be approaching. With currencies weakening, global debt rising, and investors searching for real value, the signs of a potential reset are becoming harder to ignore. Do you think the world is prepared for what comes next? We'd love to hear your thoughts in the comments below. If you enjoyed this video, give it a thumbs up and make sure to subscribe for more updates. Thanks for watching.